check right now.
Okay, it looks like we're live now. All right, so we're experiencing a little technical difficulties, and so we're just gonna give people a minute to find this location, all the people that were at our previous location. And I promise one of these days I may be technologically advanced enough to go live on a platform that I intend to at the time I intend to, in the place I intend to. But chances aren't looking good for that to happen for the next couple of weeks.
It's going to be perfect. But Shannon, thank you so much. And Payroll Restoration, thank you so much for bringing this update on the ERC, all of the fun stuff that's new for August. I know that you've got some pretty cool stuff around voluntary disclosure, as well as some other questions, and you've put together kind of a presentation for us for today, right?
Yeah, there's been a lot of changes lately with the ERC program. They just recently announced that they're going to start doing the Voluntary Disclosure Program again, which is super exciting, actually, because it gives businesses a way to back out of an ERC that they did not intend or should not have claimed. So a little bit about me. I am a payroll and an ERC expert, and we've done the disclaimer. This information is not intended to be taken as tax planning, financial, or legal advice. Every attempt has been made to present accurate information as of today. And I don't even know what day it is. It's what day is it? August 23rd?
August 23rd, 2024.
Okay, yep. So August 23rd, 2024. And so, and just keep in mind that ERC stuff does have a tendency to change fairly regularly. Even though the changes have slowed down a little bit, they're still coming at us at sometimes really fast and sometimes really slow.
But the weight kind of thing, right?
You know, it really is. And we're going to talk about that a little bit more later in the thing. Because I mean, we're dealing with the government, specifically the IRS. So it is definitely hurry up and wait. You do everything on their time schedule, not yours. But so by the end of this today, you should have an understanding of the ERC Voluntary Disclosure Program, how to apply for it, knowing when and how you can withdraw ERC claim. And we're going to talk about some common issues with ERC and some questions. But first, because we're accountants and we love statistics, I'm going to share a few statistics. And these statistics all come out of the IR 2024-212, which you can find if you go to the IRS website and type in and search, and you type IR 2024-2012, it should come up. The IRS has been using AI a little bit to determine which claims are high risk, medium risk, and low risk. And they're sending out denial letters to the ones that are higher risk and working on processing the lowest risk claims. So, okay. And we'll talk a little bit more about what to do if you get a disallowance letter, because there's a lot of disallowance letters that are going out for businesses who legitimately qualified. And we have an example of one that is happening with us. And Oh, did you?
Just, well, just to kind of repeat what I heard out of that is, so there's all the 30,000, all these letters are going out for the ones that are, they don't feel are as high of a risk of having fraud. They're working on those, but they're the ones that are higher risk. They're sending the letters out, and that's going to be coming up to with what we're talking about here in a little bit with the, is that
Yeah,
right?
so like some examples of lower risk claims are ones that claimed revenue reduction where the year over year revenue, gross revenue went down. We have one where the 2021 revenue was actually in total higher than the 2019 revenue, but they still qualified because one quarter was really high and the rest of the quarters were low.
Yeah.
So I mean but we'll talk a little bit more about that
Okay.
later. And then I mean there's thousands of ERC claims that are currently under audit. We personally haven't seen any, and when I've taken trainings from other people, I think thousands might be a little aggressive. It doesn't sound like any one firm is handling very many ERC audits. And but on the flip side of that, the IRS has also identified over 50,000 valid ERC claims and are quickly moving those through the pipeline. So while we haven't seen any of our clients receive ERC payouts for probably close to a year now, they are still starting to be processed again because they stopped. They said that the moratorium was September 14th, but we have claims that we're just now starting to see movement on that were mailed in July and August.
I have some clients of my own that have been held up by that. So this is really good information, so I can get it back to them. So those watching either now live with us on YouTube or in the replay, make sure to help spread the word to fellow accountants, everything else, that notifications, everything else are coming up is the key thing. So it's, again, that hurry up and wait. We're getting back to hurry up pretty soon.
Yeah, but when you get the letters, you have to hurry up and file an appeal and then wait a long time. But the two things that I find really interesting on this slide are that the withdrawal program has seen over 7,300 submissions, totaling $677 million of ERC claims, while the voluntary disclosure program was only open for a short time. So they had about 2,600 applications that disclosed 100 or $1.09 billion worth of credits that people are saying, I didn't qualify for this. Please don't send me these credits. So the withdrawal claims are a lot smaller than the voluntary disclosure claims.
Yeah, it's about 40% roughly.
Yeah. And I had the math, and I also had another technical glitch where I lost my notes on my slides. So I had the math, and I was going to sound really smart and say, oh, each claim was roughly this amount. But
that's okay. One of the people watching in the comments of the video, please feel free to put that in there for us.
yes, definitely share that for everybody.
Yes.
Yes.
Yeah.
And the IRS doesn't mess around when it comes to criminal investigations. And the statistics are a little bit old, but I mean, they're not that old. They're July 1st of this year. They've already initiated 460 criminal cases with $7 billion in fraudulent claims. So if someone wants to put in the comments
I'm figuring out the average right now.
what the average of the criminal cases is, because it's a lot. 7 billion in 460
$15
claims.
million each one is what they're saying. Well, so actually,
Say that again, because I think I was talking over you.
so language wise, if we average out based on the number of criminal cases they have initiated, that's 15 million each. Now, a possible 7 billion fraudulent claims is probably bigger than all of the criminal cases that are listed here. But this is, I actually remember seeing this back towards the beginning of July, and I was like, this is insane to me.
But you also have to remember that each criminal case, it could be an ERC mill. That would be one case, and they could have done millions. I mean, there was one specific ERC mill, and off the top of my head, I can't remember which one that was, but
See, I got you
they
money
did like
color, no?
they did like 15% of all ERC claims. Now think about that for a second. There was millions of ERC claims, and one mill did 15% of them,
Yeah.
accounting for 40% of all payouts at one point.
This is going to grow, and
It will.
the challenge, the thing I have, the thing that's the most challenging to me on this is, even with PPP, there was obviously a lot of fraud. The PPP, they were rushing to get money out to people. ERC, not exactly the same thing.
But they did the same thing at the beginning. They were rushing to get the money out. There was at the very beginning, you have to remember that there was a Form 7200 that you could fill out and not pay any of your taxes if you thought you qualified for that quarter. But how do you know you qualify for that quarter when
They're still making the laws and the rules, but
that not only that, but it was based, if you were qualifying under a gross receipt reduction, the quarter hadn't finished yet.
yeah,
So
that's a good point.
that was where some people got into trouble. I think the intent was good. How they applied it and processed things is where things fell apart. And in addition to criminal investigations, there are promoter investigations, and these are specifically about all the people that were calling and saying, guaranteeing that you could qualify for the maximum amount of ERC. I can't
Dear
even
IRS, if you need a call log of people, I've got on my VoIP phone system plenty of numbers that called and called and called. That's right, all you dang people spamming me.
Oh, I mean, my husband's business is an LLC he's the only person, like he has no employees in his business. And he would tell the people that were calling, I have no employees. I am not eligible. And
It's
they
okay, we
would,
can get you money still.
yep,
Right?
yep, that was what they were doing.
Yeah.
And there was a promoter that was the owner so that they could qualify.
All right, so
I'm getting a error.
your mic changed a bit. So, and you know what, I think as you are working on that, I think this is good to point out. I hope more people recognize these things. There's always going to be future opportunities for somebody to try to commit fraud on something and to take advantage. And I hope they really promote the credit of the fact they're going after all of these people, and it deters or detracts people in the future from trying to do that and makes other people even more aware of what's happening out there, right? So, can't quite hear you at the moment, but if you want to click to the next slide, I can talk through that little piece as you're working on it as well. And so from what I understand on the voluntary disclosure. So again, what this all has to do with is we basically got to a point where Congress decided to say, hold on, folks, we've got a major problem going on with all the ERC stuff, and we're going to pause and shut this thing down. And then they basically said, look, we recognize that may, some people may have applied and received money and they didn't intentionally defraud anybody. It was not understood. So they have this voluntary disclosure program to basically say, give you the opportunity to be like, my bad. I want to let you know about this and so
Right.
forth.
And now they opened it back up.
Yeah.
The first voluntary disclosure program ended March 22nd, 2024. Now we've got one that's open now until November 22nd, 2024. And there's certain requirements that you have to do. And probably some of the biggest differences between the first voluntary disclosure program and the second is that now you repay 85% instead of 80% of the ERC funds that have
Okay.
been received. And this one is only good for 2021 ERC periods. It does not allow you to file for 2020.
So I'm going to pause you there because this is an important part. Previously, could you do 2020 and 2021 for the voluntary disclosure?
Yes, and 2020 had special rules, and all of those special rules are now not a part of this program.
Got it. Well, then that makes sense. So like, look, if you voluntarily disclosed early because you recognize it early and you did that, good on you. If you thought, maybe I can get away with it, guess what? You're still going to get in trouble, right? So, and
Yeah,
you have to, so, because maybe I'm misunderstanding this part. The way I'm hearing in my head is you're going to have to pay back more now than if you had submitted it before. Is that correct?
correct.
Okay, cool.
But I mean, it's 5% more, but than the last one. But in both of them, you did not have to repay any interest that you received on
Okay.
the ERC refund. So the interest that you received, that's yours to keep. It's taxable in the year that you received it as interest income. But and this if you repay
Yeah.
if you repay and you get approved for the voluntary disclosure program, then you do not have to amend your income tax returns to reduce your wage expense,
Okay.
even though you're only repaying 85% of the ERC that you received. The only exception is that if you've already filed amended income tax returns to reduce your wage expense, you should, and you do qualify for the voluntary disclosure program, then you should re-amend your taxes to,
Re-amend your amended taxes?
yep, to put those wage expenses back in, which for most people will result in a reduction of their tax liability,
Federal government doing the same job 3 times.
right? Um, but I mean, the good news is the 15% that you get to keep is not taxable as income. So that's good.
Okay.
And when you voluntarily disclose that you should not have gotten the ERC, you aren't going to be charged penalties or interest if you pay the 85% in full.
Okay.
And you can,
How many people are going to be able to do that truly?
there's, we're, we do a bunch of reviews for other accounting professionals when they have a client that got ERC, didn't know that they got ERC, and they just, or they didn't know that, because a lot of the payroll software companies were, you could click a button and it was totally accidental. We fixed a lot of these early on where they clicked the button and they got ERC, and they're like, we don't qualify. And it was a lot of smart people that were doing it too. So, and I I had somebody walk me through because they did see it in another quarter. And this was still when ERC was a live program, not now it's all after the fact. But it was super easy. It the payroll software asked you a question, if you answered it yes, you got ERC. That was like the only qualification that a lot of the payroll softwares were doing when they were sending the ERC through.
So, and I'm sorry to keep asking certain questions because I don't want to extend it too long, but are you talking about basically that within the payroll, if they click the button, that they were like initially you could defer certain types of taxes, you could defer different things. Are you saying that it changed the calculations and that's how they were getting money out of it? That didn't automatically make them submit and file to get
It
money
it
back.
it did automatically fill out the 941 to claim the ERC on the original return.
Okay. I was gone. I didn't even realize that. So,
Yeah. There's some forms that you have to fill out when you're applying for the voluntary disclosure program. Form 2750 allows the IRS extended time to assess penalties on the employment returns or the income tax returns. That is a not negotiable requirement that you have to fill this out as part of your voluntary disclosure program packet.
makes sense.
So who can qualify? You can't already be under criminal investigation. You received ERC, but believe you're entitled to $0. And that you did not already apply for ERC voluntary disclosure program for the same periods when it was open until March of this year, because the IRS is still processing applications from the first program. And this is one of the many examples in this presentation that's hurry up and wait. They announced the program during the height of tax season and gave a March 22nd deadline. And they of the ERC voluntary disclosure program applications they've received, I don't even think they processed half of them.
Yeah.
And there wasn't that many to begin with. But any business, 501c3 or other tax exempt organization, government entity
Mhm.
are eligible to apply.
Okay. So the one thing I wanted to add here is if you're watching this and either you got money or you have clients that did, if they, for some reason, if you had any kind of weird feeling like the process of going through getting ERC funds was pushy at any time and just felt weird, take a second look is what this may be the time that make sure everything is above board. And if you need to do this, it can be done. And that's, shameless plug for you, Shannon. That's where payroll restoration comes into play if there's a question or concern. So,
Yeah. And that is something that we're doing a lot of. We actually only have room in our schedule to do 16 more before the 16 more reviews before the voluntary disclosure program cutoff,
okay.
because we only
They take time.
realistically, they take a lot of time, and we realistically we won't start one in November because we won't have enough time to really thoroughly vet it and make sure that the numbers and everything all match up. And the last thing we want to do is rush through one of these.
So what's this letter 6577C?
It's a ERC recapture
Okay.
or demand for repayment for all or part of the ERC claim. That just means that the IRS has already determined that this was not a claim that was valid. You can't be under audit for the employment returns for the tax period that you're applying for the voluntary disclosure program. And you can't have already filed an amended tax return to back out of the ERC claim.
Okay.
And I have never filed more amended 941Xs for a second or third time than I have in the last 18 months.
It's insane.
It
Yeah.
is. But I mean, when you're backing out an ERC claim, you just switch the numbers around from the corrected amount to the previously reported amount. And because when you're doing an ERC claim, if you're backing the entire thing out, the previously reported will become the corrected on the new amended return, and the previously reported will be the
Yeah. We'll let them call you for this part of it.
basically it'll be zero.
Yeah.
And if you need training on it, we do offer that as well.
Perfect.
If you've already determined that a claim isn't valid, they might have already received a recapture letter, or they may already be under audit.
So maybe a good question to ask here before you go to the next slide is, like, when you're coming into these later in the picture, are there ways to find out if a letter 6577C has already been sent to double check as like part of your process before you do it?
It should show up on the transcript,
There we go. Okay.
but it doesn't always.
Because I can just imagine it's really easy for us, hat wearing business owners to miss certain emails and mail and such. So, okay.
And everything the IRS sends is going to come by US mail.
point.
It's not going to be emailed. They're not going to call you. They don't want iTunes gift cards either. And
They prefer Amazon anyways. Anyways, okay. Who can apply? So what else we got here? The IRS hasn't received any information from a third party or directly from an enforcement action that the taxpayer is not in compliance. Got it. Okay. Ooh, PEOs. What was this other? Didn't apply using a third party payer to claim the ERC on their behalf. The employer will not be eligible to apply for the Voluntary Disclosure Program. Only the third party payer can apply. So PEO is an example, right? You want to explain that?
yeah, so professional employer organizations are PEOs. There's if a business owner ran their payroll through a PEO or a CPEO, then they're not filing their 941 using their EIN. They're filing using the PEO's EIN. And at the beginning, if somebody said, "Oh, I've got a PEO," we wouldn't touch it. We wouldn't talk to them. We would not do anything. But then I started working with a few of the PEO companies, and they're like, as long as we get this information, we'll file the claim.
Yeah.
Because we can back it up if there's ever an audit or a question. But PEO employers were totally at the mercy of if the PEO wanted to file the claim or not.
Well, basically, in a sense, it's like they own the employees, right? So the payroll, you still have the payroll totals, everything else on yours, but in a sense, the employees are all through their payroll ID number. So therefore, it was kind of their decision on that stuff. So with the PEO stuff, folks, you'll know if you need to be worried about this. You'll know if you're in a PEO for sure.
Yeah, you will. And because I have seen the paperwork when a PEO applies, because I've worked really closely with a couple.
Yeah.
And it looks like a graph that it basically is a 941 without it being a 941, where it's like it lists off the EINs and then you've got all the wages and the ERC and everything on there.
Makes sense.
So how do you apply?
Very carefully.
Yep. So you need to fill out a form 15434, which is on the next slide. You have to be able to repay the full ERC minus the 15% reduction, or set up an installment agreement to pay it. And you have, when you set up the installment agreement for this, you have to make all the payments on the installment agreement, even while you're waiting to see if your voluntary disclosure program application gets approved.
Can I just say real quickly, I wish this form was made 17 forms later. 15451.
Oh,
Anyways, keep going. Yes. So
anyway, and we have seen where the authorized person did not sign the 941X to claim the ERC for the business. And we've got one person that is going through trying to get that corrected. Still, and back earlier in the program, we would just redo the 941X so that the proper person did sign it. But now if it's claiming 2020, we can't do that because that application process ended in April.
I mean, it's kind of, to some extent, it's a good thing that it's starting to expire out, if you will. Otherwise, this just would continue on forever being a S show. So
Yeah, so here's a form 15434, and it asks for the, basic information, but then it also asks for who told you qualified? What is their contact information? How do we get a hold of them? And then, and it is a little bit too small for me to read what that bottom section is, but
just all the general information, the form, the reported refundable, reported refundable, and so forth and such.
yeah, so basically it's asking you to fill out the basically some of the same information that was on the 941X.
Okay.
All right. And then you have to submit the application with all of the supporting information and the payment using the IRS document upload tool before 11:59 p.m. local time, November 22nd, 2024. So if you're East Coast and you have a friend in California that can upload that for you, it'll be California local time.
Is that okay? I mean, it's a good point because it's not stated is that real? That's not real, right?
No, it is local time.
Oh, I'm sorry, you said local time. Nice. Okay.
All right. So next steps.
Hawaii.
Hawaii is Pacific time for IRS purposes.
Okay.
And so is Alaska.
IRS will review your application package and verify your eligibility for the Voluntary Disclosure Program. Then they will mail you a letter letting you know they received your application and whether the IRS can proceed with your application or if it was rejected. So if you can proceed, then what happens?
They'll send you a closing agreement that you have to fill out and sign. If you after you're approved or you can proceed, that's when you pay. I forgot that detail, so I misspoke earlier in the presentation. But so then you have to pay in full, or you have to fill out the installment agreement with your closing agreement. And again, only an authorized person can sign the closing agreement and the installment agreement if applicable. And then you have to return the forms to the IRS, and then you wait and wait.
So the key thing is at the beginning of this process, like right now, again, look, if you think there's a question or concern or a challenge and you're starting to go through this process, and if you don't have all the money, you better have a savings account and start putting some money in there is the right thing as best you can. Start saving, putting money aside. So when it comes time to make a payment, if you know you're gonna have to make a repayment, just put in your budget. Make it easy on life for you as best you can.
And we've had a couple of nonprofit organizations reach out to us recently where they either still had the check sitting in a drawer because they got them and they're scared to cash them.
Oh, okay.
And because they're like, we weren't, because, some nonprofits especially have high turnover in their decision makers. So, or they're bored or, whatever. So, the person who applied for ERC might not be there anymore.
New person's
then-
like, I'm not signing off on this. I'm
Yeah,
not
then
putting my name on it.
Yeah, then they get the check and they're like, I'm not expecting this. What's this for? They ask
Could you
nonprofits
imagine
are
your first day and you open up the drawer, they're like, what's this check in here for $15 million? Why is like why is it still sitting there? Sorry.
no, I haven't, I personally haven't seen one that was that
I
big
know.
for one, because the IRS sends one check for every quarter. But the other thing that some of the businesses have done is they've taken, when they've received that money, they've deposited it and put it in a savings account that they don't touch. So those are the smarter businesses. And even if you were a smart business and that was your intention, but you ran into cash flow issues and you're like, oh, I'll just take a little bit now because I need it to break even. And then you're like, I really don't think I qualify, but now the money is gone. That's why the installment agreement is available.
It also kind of makes sense now, like thinking about it, 85%, right? The fact it's not 100%. Otherwise, that would incentivize people to have manipulated this on purpose, actually get the money, put the money in a savings or high interest yielding account, knowing they're going to just go, oops, my bad, let me return it, and then they still made the interest off of it, right? But because at least this other piece, that will hopefully at least offset unless they invested it some way, which was illegal, by the way, and I believe. Anyways,
No, with the ERC, the money, once it was refunded, it was yours. You could
that's
do
right,
with it
actually, yes.
anything you wanted. It wasn't like the PPP. But the reason that they started at 20% is because that was the average fee that a lot of the mills were
Oh, okay.
charging.
Okay.
And so, I mean, there are, even at 20%, there's people that are going to be repaying more than
Yeah.
what they actually got because they paid somebody a fee
Okay.
to claim the ERC for them. And yes, we did charge a percentage of the claim, but we charged a much smaller percentage of the claim when we
Yeah.
did it.
I don't have a problem with I like the fact that people did by percentage at all. I don't have a problem with that. I
No,
think the
and
ones that were taking advantage of people, I saw up to 40% with people.
I saw one that was 50% because it started at 40%, but then if they wanted them to actually fill out the 941X and not sign as a paid preparer, they were charged more.
If you want us to commit a greater fraud, we would like to have an extra 10%, please. Thank you.
Right.
So, all right. But yeah.
But so again, this slide says do not, so once you sign the closing agreement, it will adjust the account to reflect the eliminated ERC amount, and you do not submit new amended 941Xs to correct the ERC. That is already done. So once you sign the closing agreement and pay the 85% of the ERC that you got back, you don't do anything until you hear from the IRS again.
Okay.
But
Now,
the
so
terms
once
cannot be appealed. So if they reject you,
you're done.
you're done.
Okay.
did you have anything you wanted to say?
Well,
This
I had
slide
one
is
question I wanted
just
to
stuff
ask.
I've already talked about.
The one question I wanted to ask from before, because you said you do not amend your 941s again, right? Um, After they contact you, they won't have to amend the 941s ever, correct?
Correct. That part of the
Perfect.
voluntary disclosure program, when you fill out that 153, I forgot the name of the form already, the one that Matthew doesn't like the number of.
Well, yeah,
When
1 5, yeah. Um,
when you fill, if anybody is watching and still remembers the name of that, put that in the comments so that you can make fun of us later.
15434. There we go.
Okay,
Um,
perfect.
okay. So
But
the reason I was
that
asking that part is on purpose was to clarify, because it said you don't amending returns. Like there, when we're talking about amending returns, there's two different kinds of returns that we're talking about in a business. You were just telling everybody the payroll tax returns, you will,
yes,
like 941s, those will not have to be amended. However, if you have done your like you handled your taxes in the prior year, I'm talking federal end of year IRS taxes, you already did that part for the business, everything else. Then you amended because you got the actual ERC money, and then you realized you shouldn't have got it, but I'm sorry, you got the money, you filed and redid those taxes then, and then you realized, oh my gosh, I shouldn't have gotten this money. You are most likely still going to have to amend your amended year-end
income
business
tax
taxes,
return.
income tax return, thank you is the right word I should have been using this whole time, once all of this part of it is done, right?
Correct.
Okay.
And if it's a Schedule C business, you only have to amend your 1040 and your Schedule C. But if you're a partnership or corporation or S corp, you'll have the business return and the personal return of all the shareholders.
Wow.
So
Thank you.
the fun slide, the types of penalties that you can be assessed if it's determined that you don't qualify for ERC and the IRS backs it out themselves, you'll have failure to pay, well, you won't have the failure to file. You'll have the failure to make a proper deposit. And if it's determined that the ERC claim was fraudulent in nature, you can have civil fraud and fraudulent failure to file penalties combined with the failure to file.
I'd just like to draw attention to the fact that the highest fee ones all start with 666.
That is true.
That's a
And
lot
some,
of penalties, right? It's a lot of penalties. But
it
you know what?
is.
Again, civil fraud, in my mind, I'm like, there will be scenarios where there was accidental civil fraud, I would possibly, right? But a lot of there's the civil fraud, people did it on purpose, right? Is
That would be criminal fraud.
Oh, thank you, my bad. As we
And
said at the beginning, this is not legal tax advice or legal advice. I'm not an attorney, sorry. Okay.
um and so interest does vary period to period and year to year because
Okay.
in the most recent quarter the interest is 8 to 10%. Some periods it's 5%, some periods it was 3%, but most of the time it was the 5 to 8% during the ERC periods.
So real quickly, just to share this, Deborah's watching, and she had put in the comments, ER specialist sent their paperwork to the IRS on June 16th. IRS received it on June 28th, and this is 2024. They received on June 28th. So I think we're talking about date wise. Just wanted to thank you for watching, Deborah. And if anybody's got comments as you're watching, we'll bring them in for you, of course.
Yeah, I mean, the IRS is receiving the ERC, but they haven't been processing them very fast. Since July or August last year,
Mhm.
the only ERC claims that my firm has had that were processed were ones that also changed other information, where we did a combined return, which incidentally is not available for ERC withdrawal. But we had one where the payroll company was supposed to remove the LLC owner from payroll, but what they did instead was remove everybody from payroll. And so we had to, this was one of the smart business owners that got all these refund checks, knew they owed the tax, and put the checks in their drawer so that they could mail them back with the amended returns, because that's the only way that you avoid penalties and interest, is if you send the IRS back their voided
Nice.
check.
So we've got another question, and I think it may kind of tie into what you were just talking about employee-wise. Deborah was asking again that she said that she contacted the IRS, and they gave the totals for the 6 quarters. And when she just recently connected with them, the totals were higher than they were last year for the same quarters. Is there a reason that would happen?
I'm not sure I completely understand the question.
It sounds like, well, so I don't know if I'm going to get this exactly right. Basically, it sounds like the 941s were amended to where the total wages would have been, they were showing higher than the initial time previously. So she was asking if there was a reason why the totals would be higher. I may not understand the whole question as well.
The only reason that wages reported on a 941 would be higher is if some were left off. But I think what she might actually be asking is the amounts that the business got refunded was higher than the ERC claim.
Okay.
And in that case, the difference would be the interest. And if you look at the check in the memo section, so the lower left-hand corner, it tells you what period, what year, what form, and what was the tax refund and what is the interest refund. And there should also be a letter that they get with when they get it doesn't come it could come a couple weeks before or a month after or 6 months after. It just depends on when things get printed and put in the mail, that gives the breakdown. And it says, we've adjusted your form liabilities and this is what changed.
So the last thing I'll interrupt you with on is Jeff made another comment, and I wanted to ask this question anyways. He said, we've been waiting since March. So the stuff we're talking about right now still is it's the updates in the Voluntary Disclosure Program. But they had stopped actually even processing, doing anything with the ERCs completely for a while. Does this mean they're now going to start to process stuff again? And is it possible, like I have clients that are waiting to get the money theoretically still. Is that
well, first, when they issued the moratorium, they said that they were going to double the processing time from 3 months to 6 months. But even when they announced that, that was laughable, because I don't think I ever saw an ERC claim that got processed in less than 7 months, even when they were supposedly processing them in 3 months.
Yeah.
But they did essentially slow to a crawl processing any and all ERC claims. So right now what they're doing to clear the backlog is they're sending rejection letters that you have to appeal, because that buys them more time, that clears theirs. They've determined that there are ERC claims that are going to be pretty solid. Like if it's a restaurant, they're processing those because they were all under government shutdown orders. They know what the shutdown orders are, but if you get a rejection letter for a government shutdown period, it's the business's responsibility to provide the shutdown orders, even though
Yeah, it's a good
they
point.
were widely available. So basically, if the IRS rejects anything, it's your responsibility
It's
to,
also your responsibility to stay on top of it
yes,
and not like, because again, look, if you miss the letter, it doesn't get delivered, somebody else picked it up and didn't share it with you, it's still your responsibility to be tracking this, asking questions to move forward with it.
yep, yeah. And I would just want to quickly go through the withdrawal process. The withdrawal process is basically the same as it was when I did my last update, but you can only use the withdrawal process if all of the following apply. The business submitted their ERC claim on an adjusted tax reform or tax return that ends in an X. And the business has to have submitted their claim. Oh, I put that in there twice. You have to withdraw the entire amount of the claim, and the claim cannot yet have been paid, or it has been paid, but you haven't cashed or deposited the money because you'll void that check and send it back. If a PEO filed your claim, you have to consult with them if you want to withdraw your claim, because you remember, you're using their EIN and not your own.
Yep.
And this is how you mark the ERC claim for refund up so that you can do your withdrawal. You have to write withdrawn on the left-hand side, write your name, position at the company, and sign and date, the right margin, write void on the back of the refund check if you received it, include a note that says ERC withdrawal with the form and the check, and submit the check and the claim withdrawal request to the Cincinnati Refund Inquiry Unit in Cincinnati, Ohio.
Would you suggest, gosh darn it, would you suggest that people make a copy of the check and the document itself
Always.
and save it, right? Because, yeah, thank you. Just want to make sure.
And I would send it certified with electronic delivery confirmation. That means nobody at the IRS has to actively do anything to send you back the certified mail copy.
Especially if you're sending that check back, right? Because that, like you said before, if you're sending the check back, you're doing it. It's the only way to avoid penalties, is what you said, if I heard that correct, right?
Right. And this just got brought up in our team meeting today, that if you're mailing a check using certified mail and something gets intercepted between the post office and in this case, the IRS, the post office is ensuring that that is going to get delivered. It got brought up because one of our,
What if somebody stole the check?
well, one of our certified letters hasn't moved since May. And granted, there's no check in it, but it was an interesting thing that got brought up, because what had happened to my team member was they certified mailed a check. It got intercepted and washed and made out for a different amount and deposited. And the post office, it was a lot of work. She had to file a claim, and the post office had to make it right.
If your check is really that much, include an Apple AirTag, please.
I'm not familiar with Apple AirTags, but I've seen.
It's a way to basically put something there where you can GPS track your own thing to make sure it gets to where it's supposed to go to. right? Spend an extra 20, $30 or whatever it is and make sure
Yeah,
your
but I
$200,000
would,
check goes back.
I mean, for this withdrawal, the IRS can, obviously see if a check has been cashed or not.
Yeah.
Um, but one of the other things that I did want to bring up is we have recently received a couple of denial letters for the ERC for clients, and they're all for 2021 quarter three so far. And I've seen a lot of conversations in different tax profession Facebook groups where it just seems like there's an inordinate amount of rejection letters specifically for 2021 quarter three. And you have 30 days to appeal before the IRS claim is lost.
30 days from the date on the letter?
Yes. Not the date that you received it, not the date that
Yeah.
you opened your mail, the
That's
date
why I
on
said the
the
date on the
letter.
letter.
And sometimes sometimes I will get letters from the IRS. Like I might get one that's dated October or August 26th. I might get that letter today, and August 26th is Monday. But on the flip side, I might get one today that's dated August 15th. And then
That 30 days doesn't seem like a fair amount of time.
no, it doesn't, especially with how the IRS
Tell you
processes,
what,
prints,
Iris, if
and
you do
sends
stuff
mail.
that fast, we'll do it that fast. How about that, right? Like,
Exactly. And most of the appeal rights that I have seen are
yeah,
60 days to appeal a decision. So 30 days to appeal is really low
yeah.
in my opinion. And with one of the rejection letters that we received, it was that client that had, let's say they had 500,000 of gross receipts in 2019, and they had 550,000 in gross receipts in 2021. They were rejected for a reduction of revenue because their total revenue was higher for the year than it was in 2019. But the qualification is quarter by quarter comparison. And there is not a tax return that I've ever seen that wants it broken down by quarter. It's just annual amounts.
Hmm. Yeah, well, I think the challenge there is that's where us accountants had to get really involved to it is, besides just looking at the return, we actually had to go back and look at the quarters itself and look at those
Yep.
details. I mean, if
And
you were going to do the work, you had to have a good company that was going to do it right, like payroll restorations.
yeah, and some of the what I've seen with some of the audits is they don't want just your printed P&L summary. They want every single they want all the detail.
You like the transaction journal, everything else to make sure it's.
Yeah, because what they're
You should only care about the money inside. I mean,
but,
right? Because it's about the
but
revenue.
here's what some firms were doing and some business owners were doing. They were journaling revenue to different periods, or they would have
Oh my God. Okay.
they would be really close to qualifying for one period
Yes. And moving
and move deposits from
31st to the
the
1st and stuff like that, right?
yeah.
Yeah.
And so what the IRS does with that, and they will also request your bank statements. And
Yeah.
this is for an audit. And when we were doing all the ERC claims for the clients that came to us, we were going strictly off of their P&Ls that were provided to us. And we were not requesting bank statements.
Yeah.
And when we learned what the audit criteria was, we were,
So Deborah asked a
sorry,
question.
hold on.
That's okay. Deborah was asking a question. If I can answer it the same while you're doing that is, so the happened to me too. The employee retention credit. The reason they're looking at the receipts is it's about one of the things to qualify had to do with your gross revenues, whether a reduction in revenues, so your money in being your receipts. If you didn't, you only got the credits if you had to qualify for that was a big part of it, is why they'd be looking at the receipts as well.
Yes. And when we're doing our reviews, we're not asking for bank statements. We are letting our clients know that if they do get audited, they will not only have to provide a lot of detail, they will have to provide bank statements, most likely, if they qualified under the revenue reduction and they get audited.
If you have if you have a good company that's doing quality accounting, bookkeeping and accounting for you, providing that information should not be difficult at this time, especially if you've already filed your tax returns, everything else. The only time it will get difficult is when you don't want to provide that information because it's not going to be beneficial to you.
Right. And there was just so much fraud with ERC. And we've worked with a lot of people who didn't know better,
100%
or
agree.
the person was so sure that they qualified that they ran with it. And
There have been a lot of businesses. Look, this whole thing all the way around has been devastating, and a lot of businesses like died. There are plenty that may basically maybe squeaked through kind of situation, right? And they needed any money they could get ethically and honestly to do it. So when you're being called and called and called and saying, no, you do qualify for this. Are you sure I do? No, you absolutely do. We can definitely get you money. And you've got to pay payroll and do these different things. Those are the people that have been harmed the most by the
yes,
fraud. And I feel horrible for those people.
and those are the people this voluntary disclosure program is for. So I know
Yes.
I spent a lot of time talking about the voluntary disclosure program because it is, in my opinion, the best route for these businesses that worked with a mill to return most of the money and hopefully not hopefully returning the money doesn't damage their business to where they now have to close instead of having to close before they got the money. But and it is a really good way to help the IRS and understand when I say things like this. it I'm not a fan of turning people in, but when you file the voluntary disclosure program, you do turn in the people who created this mess for that business.
Look,
And
I hear what you're saying. I'm going to take a strong stance on this one. It will be very, very obvious to the IRS the people that did it, the people you're saying turn in that did it maliciously. And you know what? Good riddance. I
and the
got no problem
IRS,
with that.
like 90% of the bad actors, the IRS already knows who they are. So
Yep.
when now the new people that are applying for this new voluntary disclosure program, they chances are really good the IRS already knows who you're turning in. And if you worked with a reputable company, definitely go to them and say, you know what, I really don't think we qualified. Can you take a look at things again? And like, my company offers the guarantee that if we applied for ERC funds that you were not eligible for and you paid us the fee, we reimburse you the fee. And it did
Honest,
happen
ethical
early on.
business.
We had a misunderstanding of one of the qualifications, and I had to refund like 5 or 6 businesses for ERC and undo their ERC. And in a couple of the instances, they had already paid to have their taxes amended. I refunded them that money too. So not doing these ERC claims for a couple businesses cost us money, but it was an honest mistake. We really had for a short period of time, there was confusion on some of the ways that people qualified.
Mhm.
And we misunderstood one of the qualifications, but thankfully it only affected a very small amount of our clients, but we made them whole.
It,
Technically, they would have qualified for this voluntary disclosure program. They would have turned us in, and then we would be investigated by the IRS. So if you feel like the place that you worked with was reputable, go talk to them first before you do the voluntary disclosure program.
good point. Good point. This, this makes me think again, as doing all the accounting stuff primarily myself. This is why when people will, like, you always have a client here or there that wants to be shady and have you stretch the boundaries of things with the accounting. The thing that most people don't recognize is, look, if I try to cook your books and something happens, they're not only going to audit your books, they're going to go and look at every other one of my clients' books I've ever touched ever again. And so when we stand our ground and other accountants are like, no, look, you can't do that. We're not just trying to be mean to you. We're trying to protect you. And when I tell you what, we have that same conversation with others to also protect you that way.
Absolutely. And, it just totally a little bit off topic, but when one accountant's payroll client has a state unemployment audit, that accountant is going to see a lot of unemployment audits for their other clients. Even if the audit turned out
Death by
good.
1,000 audits.
Well,
Ouch. Yeah.
I had a client who, unbeknownst to me, had hired a part-time receptionist as a 1099. And then when their audit got done, because I assisted with it, guess who got audited next? That audit was like, my audit was 5 minutes though, and then we spent the other 45 minutes just chit-chatting about all the stupid thing other people do.
Well, so there's the foot though. Like, here's the cool side of when you really care about what you do and if you're good at it, is if you do go through an audit and they look at it and they're like, wow, your stuff's legit. Guess what? The next time they see your stuff, they're like, I don't have to worry about them.
Yep, absolutely.
So, Shannon, thank you for this information today. If people have additional questions, I know you'd already put your information up. They can continue to ask questions, of course, in the chat and YouTube video, of course, or even reach out to your company. So thanks for all this info.
Yep, absolutely. And I'm later today, I will make sure that all of our contact information gets added to the description of this video so that, but it's on our main channel page too, just so that if anybody needs to reach out, they definitely can.